It's Conor Svensson here, founder and CEO of Web3 Labs, and this is your week in crypto on Monday, the 8th of November 2021. This week's key events include the US Treasury releasing its report on stablecoins, ETH hitting another all-time high, CME's upcoming micro futures, CBA is enabling crypto trading, and Coinbase is launching a zero-fee service. The crypto market cap finished the week up just over 6% at $2.75 trillion. The US Treasury has released their report on stablecoin risk, and they're requesting basically for new laws to come with this. This is something that's been in the works for a while and much anticipated. But basically, it's a report that talks about the risks associated with stablecoins and the wider financial system. And so what the report here said was it was really about the concerns that they had about if there was a run on stablecoin reserves and the lack of transparency around the actual stablecoin holdings. So of course, Tether and USDC, they're the two best known stablecoins and also the largest here. And the concerns being highlighted by these reports were that these stablecoins, according to the providers of them, they're backed by appropriate reserves so that that keep them basically pegged to the underlying dollar price. However, what the concern here is that there's not enough transparency around how those reserves are managed and the risk associated with them. And the thing here as well that's been driving this is when you look at like the increased adoption of this technology in terms of Tether, which is the most widely used stablecoin, it's increased its supply by 500% in the past year, and it's seeing more volumes than any other ones. And naturally, of course, there's concerns there. Are Tether being able to increase their collateral holdings behind the scenes in line with all of this there? And so the report really was calling for the SEC and the CFTC participating in regulating these markets around stablecoins as well. And one of the reasons why stablecoins are so important here is because in many respects they could potentially become the standard on-ramp that many people have for these cryptocurrencies. So if you're holding fiat dollars and you want to switch them for crypto, then going to a dollar-backed stablecoin in theory should give people the same experience, so to speak, that they get with regular dollars, except they can then use it to trade exchange for other crypto. So it's kind of like a sort of considered, although it isn't necessarily lower risk, but it is considered a lower risk way of people holding cryptocurrencies. But the key thing, of course, with stable coins is that they're not being guaranteed by central banks or government, and so it's just the companies that are providing them are. And longer term with central bank digital currencies, this may change, but certainly in the nearer term, rightly so, they're highlighting that there are risks associated with the current approach. CME this week has also announced that they're going to be launching micro ether futures on December the 6th. And so right now there are a number of different Ether futures products that you can actually trade with CME. However, the contract side is 50 ETH, which is around $220,000. With micro Ether futures, the contract size will get a lot lower, enabling people to have more precise trades. But really, what it does here is it just opens up the market to more people because of the contract size. There might be, for some anyway, it might be too big a position to be taking on here. But it's certainly good news for those people who want to actually start trading in the Ether futures market. We've seen Ethereum's cryptocurrency hit a new all-time high this week. So it's actually hit $4,656 was the high at the time of recording, and this was off the back of its previous all-time high a week or two back of $4,467. There's of course speculation as to what's been causing it, but there's certainly been a lot of news around NFTs this week and NFTs taking over New York, which we'll be talking about in our NFT update, which you should check out. But there's other things too. There's an Ethereum tracker called Ultrasound Money who've conducted some simulations on Ether's futures and said that the supply of ETH is going to be declining 2% each year as the transition to proof of stake happens. This is something that we've spoken about at length in previous episodes, but no doubt it's good for people who actually hold it. CBA, or the Commonwealth Bank of Australia, as many will know it as, they're going to be launching crypto trading services for their 6.5 million users of its CommBank app. And so they're actually going to be the first bank in Australia to actually natively support crypto here, And off the back of this, it's inevitable that the other big four banks, as they're known, which is National Australia Bank, Australia and New Zealand Bank, ANZ that is, and Westpac will follow suit. The CBA have partnered with Gemini, the exchange, to do this and chain analysis as well. So they're working with some well-known faces in the crypto space here, and apparently it's going to be launching as a pilot for limited customers in the coming weeks, and they'll roll it out fully in 2022. And they're going to be supporting 10 different crypto assets here. So this is kind of like what PayPal have done with regards to allowing people to hold crypto as well. So it's going to be certainly fascinating to see. No doubt other Australian banks will follow suit, but also on a more global basis in other regions as well, if we see this trend starting to pick up more and more there because of just the demand from people to be able to access the crypto markets. Coinbase, the crypto exchange, they're testing out a new subscription service. Apparently this service is going to be called Coinbase One, and the idea is it will give people zero fee trading and they'll get priority support there. And so one does wonder if they're trying to go a little bit after the Robinhood type model here of just really removing the friction from encouraging people to trade by having it so that there's no fees associated with the actual trading of crypto assets on the platform. But of course, Coinbase here are adding a subscription offer for it. Other news as well from Coinbase is that they actually launched a program where users on the platform can borrow up to $1 million using their Bitcoin holdings as collateral. So it's it's another big innovation here, recognizing that crypto collateral that people own can actually be used for collateral for more traditional financial products like loans. Binance have announced that they're going to be spending $150 million in France to help develop the European crypto ecosystem. They've basically created a €100 million fund to develop the ecosystem there, and it's something that's been named Object Moon, and they're working alongside France FinTech for this. And so really this kind of ties in with what we've spoken about before, like with Binance's marketplace last week. They want to find new routes and organizations to partner with to help drive innovation on their actual platform. One of the things with this is that they're going to have a accelerator as well called Object Moon Accelerator, and an online training program and so on, just to get more people across it. The Binance also this week launched an inquiry into the SQUID game token because this was basically a gaming token that launched on their blockchain platform Binance Smart Chain in the last week, and it saw a 45,000% rise, and it was a pump and dump scheme basically, i.e. people pump up the price of the token, get other people to pile into it, and then sell the holdings as close to the peak as they can, and then basically vanish. And so what happened here is that the developers of this actual platform, they were using these things called a mixer, which basically enables them to anonymize transactions, and then when it came to actually tracing where the funds went, they can't really do it. And so the developer teams and everything who are associated with the project kind of vanished, and their Twitter account was shut down, and so on and so forth. So it's certainly not good for any of the investors here, but it's also testament to some of the challenges still that exist in the place where people can launch these projects. And although the people who are more kind of across how these things work will likely see some telltale signs of issues, the more general people who might just be looking at the numbers and seeing that it's suddenly trending might get sucked in and get pulled into the whole FOMO aspect of it and end up losing a lot of money, unfortunately. But it's just good to see though that Binance is cooperating here and really trying to help drive the investigation with it. That's all we have for this week in crypto. If you're interested in other key events across DeFi, enterprise blockchain protocols, or NFTs, do check out our other week in blockchain updates. And if you want to learn more about the people behind the scenes driving a lot of these innovations, do check out our Blockchain Innovators podcast, where I speak to individuals who've made significant contributions to the blockchain ecosystem. Find out what inspires these people, get their latest thoughts on the latest industry news and events spanning crypto, enterprise, protocol, DeFi, NFTs, and DAOs. Thanks, and I'll see you next week.